Welcome to Bears in Exile. Today is June 29th, and it is time for the market overview. We'll be looking at the Dow, SPX, VIX, TNA, UUP, FXE, GLD, and SLV. And here we are with the Dow. We had talked about in the last video that we had the three options for today due to the vote. Option 1, strong updates. Option 2, sell the news. Option 3, the vote is no and the market goes down. And we got a hybrid of 1 and 2. Started off in the morning with a sell the news event going on. And we had a positive trade out of that on the daily running thread. And the dip buyers came in and saved it. And we ended up with a strong up day. And our second trade, my second trade, is not working out at the moment, but I am still holding because of I think that this is going to pause and or go down, and there's some reasons for that. Certainly can keep going up, but here we are on the Dow. We're touching the upper Bollinger Band. We're entering the bar. The short-term moving averages are, they do not have complete crossover or separation prior to entering the bar, even though the bar is very wimpy and weak and not that strong. Beyond that, we have our secondaries. They're all pointing up. And so at first glance, this looks pretty darn strong. Certainly momentum has been on the buyer's side, and we were expecting a bounce. Came a day after what we thought it would be, but it came. So no problems or worries there. So why do I think that it's going to pause or go down, something like that? Well, besides the Bollinger Band, I think that this is in for a deceleration of some sort, because we do have some divergences. You can see here on the stochastic, you have a high here, you have a lower here, but you could say, oh, this is still going up. This could exceed this, and that won't be a problem. That is true. Now, if we change to the 60-minute time frame, we see that the short-term moving averages had their breakout, and it is bubbly and wobbly and not attractive, not uniform. Which would imply that it needs a bubble corrective move to fix this at the least, which could also lead to a retest of the bar, which would be healthy, as although it did sort of kiss it here again, it wasn't all the way through when it did it. So it would be best if we saw that again after it is out, and we haven't seen that yet. Beyond that, stochastic high here, lower high here, price does not confirm, slanting down. MACD histogram, peak here, lower peak here, price does not confirm, slanting down. And of course secondaries are mixed. You could have the MACD tick down, RSI still pointing up, stochastic pointing down. Okay. Well, what about everything else? Well, SPX, we are above the upper Bollinger Band. Well, we could have some, the market takes the news tomorrow really well, and we have another huge up day, and just pushes the Bollinger Band with it. Entirely possible. On the news today, we had a sell the news start, and the dip buyers came in and saved it. Are they going to be willing to do that 2 days in a row? We don't know. Unlike the Dow, we don't have divergence on the daily. But if we go into the 60, have that same ugly, wobbly, bubbly short-term moving averages going up, stochastic peak here, lower peak here, price does not confirm, sliding down or slanted down. and we do not have that on the MACD. So this is not as strong for that case as the Dow is. But like the Dow, we had a downtick today, and it has not been reached. And yeah, this ticks more bars than the 3 to 4 on the daily because this is intraday. But we do have that, so we'll be watching to see if that plays out. But that is almost 10 points, so we will see if that happens. Kind of interesting that it is almost to the upper price consensus level. So maybe correlation there, maybe. And on the VIX, we pierced the lower Bollinger Band and came back. We're not sitting on it. We're not below it. We are sitting at the price consensus level, the major one. That's kind of interesting to me. You can see that we have a weak, wimpy bar to contend with if it wants to continue going down. And we are already entering the bar prior to complete crossover and separation. Not a good sign for that. Now what about divergences? Well, if we go into the 60-minute, because we want to be uniform across our charts, we don't have a exactly similar thing to the other ones, to the down the S&P. What we do have is we have this low over here, and then we have this higher low on the MACD histogram here, and the price does not agree. This is slanting up. So something to be aware of. Stochastic is pointing up, RSI down, MACD histogram ticking up, MACD still pointing down. Very mixed. So, what about TNA? Well, TNA almost closed at the upper Bollinger Band line. It did kiss it. It backed off. We do have an inverse hammer. We have a hammer or a hanging man, depending on what you want to call it. We also have a better formed bar. We also have entry to the bar prior to complete separation of the short-term moving averages. We also have a stochastic high, RSI, room to move, MACD histogram still ticking up, and MACD still pointing up. So what about divergences on TNA? Well, 60-minute. We have a high here, and another high here. Price does not confirm, and this is sloping down, and price is going up. So stochastic is pointing down, RSI is still pointing up, MACD getting ready to stay where it is or maybe have a crossover. But yeah, this sloping down interests me, and we know that max pay on TNA is at 71, right here. So for all those riders to not lose money, it does need to come down at least some. So it makes sense to me for it to come down some. It is at the upper Bollinger Band line. It is a hammer or hanging man, whatever you want to call it when it's at the top. And it's all very interesting to me. And it can, of course, do whatever it wants. NDEs trump all charts, but the charts are our friend sometimes. And moving on to UUP, another big down, which really helped power the rally. If it didn't do it all, and yeah, you could say that this is a spinning top. The upper wick is larger than the bottom, but still. Beyond that, you have everything pointing down, MACD histogram ticking down, and this looks bearish. We have a bearish bar, and we are now below the lower price consensus point. This looks bearish, and if this is bearish, the market should go up. Well, let's take a closer look. 60-minute. And, you know, what do we have? We have an obvious bubble, extreme separation in the short-term moving averages. This should need a fix. We are at a level that seems to be some sort of consolidation before it decides to do whatever it does, which tomorrow the news will definitely majorly influence. Could it continue down? Absolutely. Could it go up? Absolutely. MACD histogram. We have a low here, low peak, and we have a slightly higher low peak here. So we do have this sloping up and the price not confirming it. Interesting. If that is to play out, we see the stochastic pointing up, and the RSI, still down here. MACD still pointing down. MACD histogram ticking up. I'm going to end this first video since it is getting over 10 minutes, and I will continue with FXE on the second video. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.